We're going to move on to Wonderfi. And this is the Kevin O'Leary backed crypto based company that, we're going to ask the question. Although Brett does inform us that the latest set of financial results are starting to look significantly better, but the stock itself has performed very poorly. There has been a lack of consistent profitability, and that really does in a business, even if it is backed by Kevin O'Leary.
Yeah, I think they decided just to improve performance because Brennan decided to take them out behind the barn after his last segment. And ever since then, their financials have vastly improved. So that's my theory behind it. But let's dive
Probably
into it a bit more.
Sound theory.
But so Wonderfi, symbol WNDR on the TSX. It is an operator of regulated Canadian crypto trading platforms and other digital asset businesses, including BitBuy, Coinberry, Coinsquare, Coinsmart, Tetra, SmartPlay. And it is, of course, backed by the prominent investor Kevin O'Leary. And as well, though, it has not been performing great year to date. The stock just has frankly collapsed, especially if you compare it to other crypto companies. They've generally, as a whole, for the industry, have done actually quite well this year. Wonderfi, on the other hand, has fallen 37.5% to only 20 cents a share, and that results in a market cap of $131 million. And even then, zooming out, the company still has performed bad since its IPO in 2021. It's fallen 69%. So even then, it's not great. It has rose from its lows in late 2022 of about 13 cents, but it still hasn't recovered to the same degree as what we've seen in other crypto-related markets, exchanges, Bitcoin miners, and so on. Effectively, all of them have improved in the same time period, but Wonderfi hasn't improved as much, so don't be jumping of joy because it increased 50%. Some of these companies have increased tenfold in that time in the same space. But the company strategy, let's dive into that a bit more. They're really a consolidator, or have been the last few days, of regulated Canadian crypto companies. Effectively, across the world, crypto really has been regulated in various forms over the past decade, and the winners of the market share really have been those companies who have been able to work through that regulatory system and build up that market share while we are either working with lawmakers, working just with the regulations and so on, and be able to actually build that, because we've seen time and time again crypto scandals in various countries around the world in various forms of regulation fall apart. And it's really the companies that are actually really consolidating and able to actually build a platform under a regulated stance that seem to be doing well. So, for example, in the US, we've seen Coinbase do quite well under that model of working with regulators. So in addition to what you see on the timelines of their various acquisitions, recently they actually acquired 110,000 Canadian clients from Bitstamp after the quarter's end, where Bitstamp actually retains a portion of the revenue from those clients. So they're not actually diluting shareholders or issuing debt or anything to do that acquisition, which is a bit nice to see. It's kind of like a royalty system there. And it's actually a bit different, which it can be good, it can be bad. It has its trade-off, obviously, but the near-term effect is normally not as negative because it really relies on the performance of those clients. Their Canadian ecosystem currently supports retail trading, institutional trading, crypto payment staking, crypto custody, and direct investments. The company is now as well looking to replicate that Canadian strategy by going into Australia with this acquisition of FX Institution. And we'll see really how that goes. They just acquired that only a couple months ago, so that's really just the groundwork at best right now. But has this strategy shown shareholders what they want to see in the financials? Obviously, most shareholders aren't pleased, at least for what the share price is saying, but the financials have dramatically improved. The company has substantially grown its revenue over the past year to $18.5 million from only $2.5 million the prior year. That is largely due to acquisitions, but some other things we'll get into. Due to the rapid scaling over the past year, of course, costs have risen, but across the board, the company has been able to improve, posting now an operating income of $3.1 million, prior year being an operating loss of $7.5 million. So even with acquisitions, great improvement for that line item. The company was able to post a net income of about $5 million for the quarter, and that ends up with being only a single cent per share. As well, the company did have positive cash flow of $4.4 million, and it does seem to be tracking the net income quite well. So it's not one of those weird gains or losses accounting income statements for this quarter, at least. But backtracking a bit, the company did have a couple of line items I do want to dive into. The company had significant interest of 1.1 million. This is from them actually holding custodial cash for clients, but they actually earn the interest on it, so they're not paying their clients interest, they're holding it, they're keeping the interest. So if interest rates drop, the company will be negatively impacted. And as we've seen, the Canadian Central Bank, which is the dollar denomination they mostly hold their clients' cash in, they've already dropped by 25 basis points, and they're getting roughly that short-term interest rate of 5%, or now 4.75%. So if that keeps on dropping, obviously that interest income will drop, unless, of course, client cash amounts increase at a higher rate compared to the decrease. The company held 109 million of its client cash at the end of the quarter, majority of that being, of course, Canadian and then some US dollars. And I wouldn't be surprised if they do keep on moving forward like they are planning to in Australia. You start to see some Australian dollars in there as well. As well, the other item I want to mention is they did sell its majority stake in blockchain change, resulting in a gain of 1.2 million as well. They had distribution from blockchain entities of 0.7 million. So about 1.9 million in one-off increases that are probably not going to reoccur in any form. So we're looking somewhere, really, once you take those out, between 3 to 3.5 million in net income, depending on the exact tax impacts. Obviously, they're paying tax on some of those sales, but it's not exactly that 5 million in net income, which you'll just see on their GAAP earnings. As well, and a very important factor, especially because they have been acquiring companies, is to look at that share count increase. Shares have over tripled in amount since the end of 2022 due to those significant acquisitions in 2023. The share count was about 215 million and now is at 653 million. That's over a 3 times increase. And even for acquisitive companies, that is a substantial increase. Given that acquisitive strategy, I would expect dilution going forward to acquire companies, but probably to a lesser degree than this, because it's just been a massive, massive increase over the past year and a half. The company's current fully diluted shares, so that includes warrants and options and restricted share units, would be at 725 million, and largely those are due to those prior acquisitions having warrants and options embedded in them to some degree. But all of the 50 million warrants, as well as many of the 16 million options outstanding, are currently out of the money. So unless the share price really appreciates, those might not be exercised, meaning the share count at this time will be relatively similar. But as well, I wouldn't be surprised if they actually rolled back that share count, do a 10-for-1 consolidation, just due to the sheer amount of shares outstanding. For a company this size, 650 plus million shares outstanding is a massive amount of shares. Just putting that out there. So don't be surprised if you see a 10-for-1, even a 20-for-1 rollback, just to get that share count down. But that being said, the company does actually have a very nice balance sheet at this time. They have $42 million in cash, and as well as they have 10 million in digital assets and cryptocurrencies, and they have minor debt and leases, but it's really a rounding error. It's about $500,000. And I will just say they do need to hold some sort of digital assets because they are running an exchange. Those are their own reserves. To facilitate trading, you need to actually have some of that. So they run as like a market maker scenario. So they obviously need to have some on their books, but it is highly liquid. Most of it is in Bitcoin and Ethereum, which they hold 5 million between the two. They could liquidate that in a second, and it's very cash-like. But it is, of course, volatile, but a very nice balance sheet across the board. If you include those digital assets as well, that comes out to 52 million, which is about 40% of their market cap at this time. So that is significant in liquid assets. But lastly, I really want to stress their reliance on the success of cryptocurrencies as an asset class for the company as a whole. The company benefits from increased pricing, increased trading volumes, as the company earns their commission as a percentage of trading, similar in the sense of a market maker. The spread, a market maker spread, the higher the price, the higher the commission, as it is a percentage. So they just purely higher prices, they win from that. And as well, just due to how people really trade into cryptocurrencies more and more generally when the price goes up, it gets that really exponential effect. So higher prices means more people are trading means they get more commissions, and more commissions, and the commissions are greater just because of the higher price. So you can see when they're increasing their revenue by 8-9 times year over year, even with acquisitions, about 3 times that can just be purely because of the price increase in the cryptocurrency total market cap. So what the chart I have up here for our viewers is just the total cryptocurrency market cap as an asset class. It's about 2.37 trillion at this time, which is substantially higher than the lows in late 2022, about 700 billion. And about a year ago, it was about around $1 trillion. So just that increasing over to really 2x, 2.5x over the past year is substantial just for the company, even if they did nothing at all. Just to give you an idea of how directly related it is. And of course, you need to take into account volumes also increased during that time as well, just as a function of the entire market. Nothing to do with Wonderfi. You've seen in the US, you've seen in Asia, you've seen in Europe. Across the board, it's increased. Nothing to do directly with Wonderfi. So, concluding, obviously, Wonderfi has improved their fiscal situation substantially, going from substantial losses, 3 times the revenue last year, to now being actually profitable, being cash flow positive. Unfortunately, Brennan's going to have to go behind the barn and dig up the corpse of what was Wonderfi, because last time it was taken behind the barn. The company has diluted significantly, however, conducting aggressive acquisitions, but the company is in a substantially better position, really due to those acquisitions. The company has looked just so much better since Brennan last looked at it. Very high revenue, driven by that revenue, but the company just operates in an extremely, I cannot stress this enough, risky environment. You've seen other companies even do better during this time. It's similar in the way of a commodity industry taken up to 11. It is extremely risky. It's driven by cryptocurrency volumes as well as the price and things that are just completely out of management controls. So even if you are taking, even considering a position in Wonderfi, you need to accept the risk of the entire market as a whole. You can't just say, I like the company because they're doing X, Y, and Z. You have to say, I like the company because X, Y, and Z. Plus, I like the Canadian crypto ecosystem and the Australian system because, of course, being in a heavily now regulated environment, that could disappear or change drastically overnight due to whatever political economic scenario. So I will say, just closing out, it is more appealing than what it was a year ago, but that's just a very, very low bar for what it was. Within the crypto space, it does have potential, but it just does not fit a buy and hold investment criteria, which we have and which we believe will produce long-term returns due to the innate volatility of the space, and that is not going away anytime soon.
Yeah, it's definitely a good summary. I am surprised just to see Wonderfi has not received a speculative jump in a positive year for crypto overall.
I wonder, is that
Even
because of the share
if it
price
didn't have the
dilution? Like, is there
likely. I
enough
mean,
dilution?
yeah.
I mean, if we looked at the
So,
market cap may be rising, but if they're just issuing more shares, then
I did look into that a bit. I think part of it, like it is to do with dilution. Some of the shares they were held in escrow during the time, and they've been getting unlocked during the start of 2024. So I wouldn't be surprised if some of those escrow shares are getting sold off. They have actually issued a small buyback. It was immaterial for how many they bought back at this time, but they are actually starting to do that. And I would actually just like to see a rollback, like I mentioned as well. Just
Yeah, I mean,
shares.
I would say that's coming. Like on an operational basis, not net income, but operationally, like you said, 3.1 million. I mean, still, even there, because they have so many shares out, that's less than half a cent per share operationally. So, I mean, it's funny because Kevin O'Leary is the finance guy, and he's kind of let the capital structure in terms of shares outstanding just get out of control. Again, he's likely in the stock. In name only to a large degree. But like you said, share consolidation is likely coming because you're not going to get much interest at 20 cents. I mean, from institutions, which they'd like to see buying. And like you said, it's a good point. If the price increases and the activity in crypto, if the activity in crypto decreases and price decreases, the numbers here are likely not sustainable. It's a bit like looking at, I would say, a commodity stock that's tied to the price of the underlying commodity they sell. If that commodity goes down, they're not going to do as much cash flow. If the activity in crypto, the market value of crypto goes down, likely this company doesn't do as well. The flip side is always true, but there's been high degree of cyclicality in crypto kind of over the short term of its history. I don't think we should expect that to subside suddenly. Like I think that it should have ups and downs, and then this company is just going to have those significant ups and downs in terms of its earnings. That's what it looks like to me at this point.